Hey, what's up, my friend? So, yeah, I got a few questions, right, coming in, right, and say, hey, Rayner, what's wrong with your face, man? I see some pimple over here and your lip and some bumps, right? So the truth is, I have actually a cold sore recovering from it, so it was quite painful episode over the last few days, but right now it's much better, at least to a point that I'm comfortable, right, doing this video, even though you might see some, little pimply looking stuff on my face. So yeah, that's from a cold sore. So moving on, right, today's episode, right, I want to talk about, trading strategies, right? Why trading strategies will only get you so far, and what should you do instead? So here's the thing, right? Many traders, they get started in trading, right? And what's the first thing that they are looking for? I can almost assure you it's trading strategy, right?
Hey Rayner, which is the best trading strategy for me, man? Hey Rayner, which trading strategy should I use? Hey Rayner, which trading strategy has a high winning rate? Hey Rayner, which trading strategy can I, use to make a very favorable risk to reward on my trades?
So it's all about strategy, and strategy. But I'm here to tell you, right, that trading strategy itself will only get you so far. It's near impossible, right, that you can be a consistently profitable trader just based on your trading strategy itself, right? And let me explain why. And the reason for it is simple, right? Is that when traders, they learn new trading strategy, right, what's going to happen is that a trading strategy will only profit in certain market condition. I'm sure you can agree, right? Let's say a trend trading strategy, it will only make money in trending markets. When market goes into a range, that strategy will stop working. So it's only in certain specific market conditions will a trading strategy make money. And here's the thing, right? I'm sure you can agree that market conditions change. It can be from an uptrend goes into a range, then to a downtrend, from low volatility environment to high volatility, etc. Market conditions change all the time. That's the only constant in trading, and you can be sure of it. So this means, right, that your trading strategy will only work in certain market conditions, and in certain other market conditions, it will cease to work. And that's where you go to a drawdown and you go and suffer losses. So here's the thing, right? If you only look at your trading strategy in terms of the rules, the entries and exits, right, it will only get you so far, because when the drawdown comes, I can bet, right, that you won't have the confidence to continue trading that strategy, because you will be faced, right, with thoughts like, man, I'm losing money, over the last 5-6 trades. Should I continue trading this strategy? Oh man, what if these losses get even more, right? What should I do? Should I abandon this strategy and look for something new? So you can see that trading strategy itself, right, the rules, the entries, exits, and stuff like that will only get you so far. If you want to move your trading career to the next stage, you can't just be looking at the trading strategy at a superficial level. You need to dig deeper, right, and understand, right, your trading strategy, like how you understand your wife, your spouse, getting intimate with it. So how do you get intimate with your trading strategy? So I want you to answer these 4 questions. Number 1, what is your trading strategy about? Is this a breakout trading strategy? Is this a mean reverting trading strategy? Is this a counter trend trading strategy? Is this a spread trading strategy? Whatever the case is, ask yourself, what is this trading strategy about? Question number 2, why does this trading strategy work? Right, all trading strategy, there should be a concept, a logic, a theory behind why the trading strategy makes money. Question number 3, when does the trading strategy work? If it's a range market trading strategy, then clearly it will make money in range market. Trending market shouldn't be making money. And finally, number 4, when doesn't your trading strategy work? So clearly you also want to find out which market conditions, are not favorable to your strategy. So let me give you an example. Let's say in this case, a good example. Or let's start with a bad example. You go into a trading forum, right, and you find out there's this new trading strategy. When the RSI is below 30, 20 period moving average crosses above the 50 period moving average, you go long. Okay? And you exit, right, when the 55 period moving average, crosses below the 30 period moving average. Something like that. Right? That's the strategy that's being shared. And let's see, right, let's put this to the test, right, to those 4 questions that I've just shared with you. Number 1, what is this trading strategy about? If you ask me, it might be, let's say, best indicator combination trading settings. Or let's keep it at that. All right, okay, fair enough, right? Let's say this trading strategy, utilizes best combination parameters of indicators to trade the markets. Question number 2, why does it work? You're stuck, right? Why does it work? I myself have no idea what I just said, and I have no idea why it works, right? So you can see that many traders, they will get stuck at a point at why does it work. Many times, right, traders will say, oh, because XYZ trader posted on the forum, he has a high reputation, he seems legit, right, it should work. No, doesn't work that way. You have to do the work yourself. So that's an example, right, of when you're caught, right, with a trading strategy which is just superficial, and you know that in the long run, you won't have the confidence to trade it when the drawdown comes. So now let's look at another example, right? By this time around, understanding deeper about your trading strategy. Number one, let's talk about a trading strategy. What is it about? Let's say trend following, right? A trend following strategy makes money in trending markets. So why does it work? Well, trend following works, right? Because market trends over time, right? Not all the time, but it trends, right, in the long run. And it trends because there's always fear and greed in the market. Traders get greedy, investors are greedy, they're piling on, right, hoping to buy high and sell higher. Then there's fear in the market, so that people are dumping assets, right, at wholesale, at bulk number of orders, it just keeps selling, and that forms a downtrend. So in the long run, right, as long as humans have fear and greed, right, trend followers, right, will be able to profit from this phenomenon. Number three, when does trend following works? Well, it depends on the type of trend follower you are. If let's say you are a longer term trend follower, then clearly you will make money, right, in sustained long period or prolonged trending environment, maybe on a daily or even the weekly time frame. And when doesn't trend following works? Again, it depends on the type of trend follower you are. If you're a longer term trend follower, then short term trends, right, will actually cost you money. You won't be able to profit, right, from short term trends, since by the time the short term trends has ended, right, that is where you're probably just entering into the party where you're a bit too late. So you have to know, when your trend following strategy works and when it doesn't work as well. So this is what I mean by, getting intimate, right, with your trading strategy. And trust me, right, if you can answer these 4 questions, if you do the work to validate your trading strategy, right, you will go much further in your trading career, because now you know that you're trading with something that's proven to work instead of just, based on hearsay or whatsoever. All right, sounds good. So with that said, right, I have come to the end of today's episode. I wish you good luck and good trading. I will talk to you soon.